How many bank accounts do you have for your business? One, two, three? You might be confused. Why would I need multiple bank accounts? Once more than enough, right? I'm not saying that you're wrong, but there might be some benefits of having multiple bank accounts. Each account to be used for specified purposes. You see, there's this saying that says revenue is vanity, profit it is sanity, but cash is king. So you might have, let's say, $100,000 in profits on paper, but if your bank account shows nothing there, then you are in big trouble. Cash, cash is the most important indicator or performance indicator in your business. So you'll have to have a very robust cash management understanding of the cash management and also a robust cash management system. There's this book called Profit First, written by Mike Michaelovich, and he suggests setting up 7 bank accounts. Yes, 7 bank accounts, each used for specified purposes. And he says that it will improve your profitability and also help you manage cash better. I'm not saying that this is a scientific approach, it's more of a psychological approach, right? So if you read the book by Morgan Housel, then this feels quite similar. The Psychology of Money is a personal finance book, and he says that to be profitable, to have financial independence, then you do not need huge income, but what you need is huge savings. So same rule is being applied here. What Mike of the Profit First approach says is that whenever you are being paid an invoice, right, what you do is you set a certain percent already for a profit, and every time an invoice comes in, you let's say if you are thinking of setting 10% as profit, then you immediately transfer the 10% of the invoice to the profit account, like, right? And similarly, if you will also need to pay taxes on that, so a certain amount also you can send it to another bank account used for the purpose of tax, so that when the time comes to pay taxes, you will have enough money to fulfill your liabilities to the government, right? And he talks about this Parkinson law, where the supply will determine the demand, right? So what that means is that, let's say you have $100 coming in. If you have only one bank account, you will see that you have $100, and then you'll go out and you'll spend all that money, $100 expenses, whether it is required or not. You will not think about it. You'll just see, I have cash in my bank and I can pay my bills. You'll even incur additional bills, right? But let's say you are in the habit of immediately transferring some amount to other accounts and using the remaining as your operating expenses. Then what you will do now is that you'll be compelled to use that money, only that money, for your bills. So if you do this month after month, day after day, then you'll be into the habit of reducing your expenses, only using or only incurring or only paying those bills that are most important for your business, and not going out and spending like it is the last day on earth, right? So you'll be in that habit, and at the end of the year, you'll be able to pay yourself, you'll be able to pay your taxes, you'll also be, because you are keeping your expenses down, you'll also be hugely profitable. So that's all the things the Profit First approach teaches. It's all more or less psychological. He suggests setting up 7 bank accounts, We can get into the technical details of that if you want later on. But the underlying principle is that if you have more money, then you'll spend more. If you have less, you will spend less. That's the whole idea of setting up multiple accounts. And he suggests that uh, you might be thinking, why do I need multiple accounts? I can just prepare a, prepare a spreadsheet and then bifurcate everything that I want to save this much of profit. But like I said, it's more psychological. If you see money in the bank, then you will be tempted to use that for expenses. You'll be incurring expenses right, left, and center. So it might be a good idea for you to think about, maybe I could set up different accounts and set aside money immediately when it comes in. That can be a very good idea. That can be a very good approach. If you want to learn more about that, how to set up or what to do, what percentage to send into profit accounts or salary account or whatever, right? We can go into the details, but what I wanted to discuss today is the underlying principle, the principle of the Parkinson's law, the psychological effect of seeing a large amount of money and going in and expending it all in one day, or dividing it whenever it comes in, dividing it, putting it out of your sight and out of your mind, and only having a just a little amount from where, if you have been incurring too much, then you will be compelled to see where you are expensing too much money, what costs you can cut, right? And that will increase your profitability. You will be able to live by on only the certain percent that you will set aside for your operating expenses. And the end of the year, you'll be profitable, you'll be cash rich, you'll be able to enjoy everything that you wanted to enjoy, because you wanted to be your own boss. You wanted to make profit, but some bad habits will lead you to too much expenses and your profitability will dwindle, right? So you might want to explore this topic, setting up many bank accounts. I know it might be uh, that it will increase your administrative work. It is not for everyone, but you can explore the idea, right? Because humans, we are emotional beings. We think we are rational, but we run on emotions. And so if we are able to get rid of our emotions, put the money out of our sight and out of our mind, then we might have a better chance of improving our profitability, our cash flow. That is a good idea to explore. Okay, see you.